Welcome to the Economist in Your Ear podcast. Have you ever walked down a bustling street, seen crowded tourist spots, and just assumed, the economy must be booming? What if those crowds tell a much more complex, maybe even surprising, story about consumer spending? Today, we're unpacking a really fascinating phenomenon gripping China, something that's been dubbed Dalifornication. It's this picture of millions of travelers flocking to places like the laid-back haven of Dali. But it raises some genuinely intriguing questions about economic indicators and what it really means to be a value maximalist.
Right, someone who's really prioritizing getting the maximum experience, the maximum utility for the least amount of money. And that value maximalist idea is, I think, central to understanding the shifts we're seeing. This isn't just a China story either. It's a compelling look at how these fundamental changes in consumer behavior are redefining tourism, economic vitality. And it offers lessons, really, for how we interpret economic signals everywhere. We'll explore why these places are so packed, who's actually spending, and, well, what some of the initial takes might be missing.
Okay, so let's start in Dali itself. The southwestern backpacker's paradise, nicknamed California. The picture painted is often, frazzled city dwellers retreating there for months, but maybe doing it on a pretty tight budget. We've even heard anecdotes, right? Local merchants grumbling that too many visitors just come to buy piao.
Buy piao, yeah, that local term, basically meaning freeloading or, just soaking up the atmosphere without spending much cash.
Exactly. And the initial paradox is quite striking, isn't it? You've got these incredibly busy tourist spots, maybe busier than ever before. Yet underneath, there are these whispers of caution, even complaints from merchants and maybe richer urbanites looking on. The first thought might just be, okay, this is consumer downgrading. Everyone's cutting back. Simple.
Right, belt tightening across the board.
But then the data throws up this surprising counter-narrative. It looks like less wealthy groups might actually be traveling more.
Yeah, the numbers here are really telling. They paint a much clearer picture of this shift. So in the first half of 2025, Chinese travelers took a huge number of domestic trips, 3.3 billion.
3.3 billion. Wow.
Yeah, staggering. And that's a significant 20% increase year on year. So huge surge in just the volume of travel. Total spending also surged, up over 15%. And notably, that's the first time travel spending in the first half has actually surpassed pre-pandemic levels.
Okay, so far so good. Sounds like a boom.
But here's the twist. If you break it down, tourists actually spent about 4.3% less per trip than a year ago.
Ah, okay. Less per trip.
Exactly. And on average, people are spending only slightly more per person now than they were back in 2019. This really points towards a powerful shift in the composition of travelers, It's not just everyone uniformly cutting back.
So what's the most striking thing for you in that data? More trips, but less spent per trip. It feels a bit contradictory.
Well, what's really compelling is that the sheer volume, the number of trips, is just outrunning the growth in spending per trip. And this lines up perfectly with what Joe Peisel at Trivium China observed. He suggested the addition of more lower-income travelers is likely what's driving that dip in spending per trip.
So it's not necessarily that individuals are spending way less.
Not necessarily, no. It's more that you've got this new, larger group entering the market, and they naturally have a different spending level per trip. And there are just so many of them now.
And this isn't just guesswork, is it? There are surveys backing this up.
Precisely. Like that Bank of America consumer survey. It found a really remarkable shift in sentiment. Fully 54% of respondents earning less than 100,000 yuan a year said they expected to increase their spending going forward.
Increase.
Yeah, increase. And that's a huge jump from just 34% back in June. It was actually a bigger jump than for any other income group.
That's fascinating. So less affluent groups are feeling more optimistic about spending.
It seems so. And if you connect that to the bigger picture, it suggests that while sentiment might be a bit weaker in China's biggest, flashiest cities, Beijing, Shanghai, the mood seems demonstrably brighter in smaller cities, further inland. And these places are home to, nearly 1 billion people.
A huge segment of the population.
A massive segment, and we see hints of this elsewhere. For instance, retail spending in 5 smaller cities in Henan province grew nearly 8% in June.
Okay, so the crucial question then is, why? Why is this lower income group seemingly more willing to spend and travel right now?
That's the million-dollar question, isn't it? The Economist article flags a few possibilities. Maybe their saving rate has dropped more than it has for the wealthy, freeing up cash.
Or perhaps their incomes are actually growing a bit faster.
That's another possibility. Or, as Anna Zhu at Bank of America noted, maybe there's a perceived improvement in the property market outlook, specifically in those smaller cities, easing some financial anxiety.
Right. The property market looms large over everything.
It does. And we also can't ignore the role of local governments. Outside the megacities, they've been actively strategically promoting affordable travel.
Like those football tickets you mentioned.
Exactly. Jiangsu province's 10 football tickets, 10 yuan. That's incredibly cheap. And reports suggest it really swarmed the region with people looking for low-cost fun.
So it's not just organic demand, there's a push factor too.
Absolutely. There's a clear strategic element here catering specifically to this new group of consumers by making things highly accessible and affordable.
Okay, let's dig into this a bit more then, because while The Economist gives a great overview, some of our other background suggests there are maybe layers here, nuances beyond that initial framing. For instance, this idea of consumer downgrading. Maybe it's a bit too simple.
I think it is, yeah. That 4-5% dip in spending per trip.
Yeah.
It isn't just downgrading in that negative belt-tightening sense. It feels more like a blend of things. One, that changing traveler mix we talked about, more budget travelers in the pool. And two, something you could call discount-driven deflation.
Discount-driven deflation. What does that mean exactly?
Essentially, in areas like food, attractions, maybe even basic lodging, there are just more deals available. Prices might be slightly lower or value propositions better. So people are finding slightly cheaper baskets of goods and services for their trip. It's seeking value, not necessarily just pure austerity.
Got it. So demand isn't missing. People want to travel.
Definitely.
It's just a different kind of demand that's really taking hold. A shift in priorities where value is absolutely king.
Precisely. And what's genuinely new, I think, is how people are traveling. This whole California vibe, digital nomads, slower pace, low daily spending, that fits right in with this other trend called special forces travel.
Special forces travel. Sounds intense.
Yeah, it refers to these super fast, super cheap, almost checklist-style trips. Hit the main spots, spend as little as possible, and move on. And that combination, the slow burners and the fast burners, it undeniably fills the streets. It creates that buzz.
Right.
But as we heard from those Dali merchants, it doesn't always fill the cash registers in the way they're used to, or maybe the way they expect from, say, older patterns of tourism.
Right. So if you're that cafe owner in Dali, you're seeing loads of happy people milling about, but maybe not selling as many lattes as the crowds might suggest. So what are the real engines driving this surge then? Beyond just the freeloading anecdotes, this is where it gets really interesting, I think.
Yeah, beyond the surface level, I see three key factors really driving this. First, it's value infrastructure and promotions. We talked about the cheap football tickets. Provinces are leaning into these low-cost draws. They create these big crowd events, huge footfall. But the spend per person at that event is tiny. Great for vibrancy, maybe less great for immediate profit for nearby businesses.
Okay, that makes sense. What's second?
Second is high-frequency mobility. China's dense, efficient, and relatively cheap rail and air networks make these short micro-trips really feasible.
So people can just pop over somewhere for a day or two very easily.
Exactly. Which means those big trip counts, like the 3.3 billion, while accurate, might slightly overstate the number of unique individuals traveling or the total spend per person over a period. Because one person taking 3 short trips counts as 3 trips.
Right. It counts the journey legs, not the people. Got it. And third?
Third is that sentiment stabilization outside the top-tier cities. We mentioned the smaller city retail doing okay. And even if the property market is still weak overall, just a slight easing of that deep pessimism at the lower end seems to be enough to unlock some willingness to spend on travel for these lower-income households. It's marginal, but it helps.
Okay, so bringing it back to the merchants in places like Dali. What's the core issue for them, if it's not simply that demand has vanished? It sounds more complex.
And this is crucial, I think. The original framing might underplay this, but yield management is the real challenge for merchants.
Yield management. So getting the most revenue out of the customers they do have.
Exactly. When your customer base shifts towards being more time-rich but cash-light, your traditional metrics are going to suffer. Things like ADR, average daily rate for hotels, or RevPay or revenue per available room, or even just the average spend per customer in a cafe, those will likely fall.
Or else.
Unless the sellers adapt. They need to rebundle offers, change their pricing strategy, think about off-peak deals, maybe memberships for longer stays, maybe pay what you wish for certain extras. It's fundamentally a pricing and packaging puzzle, not necessarily proof that underlying demand is gone. We've seen similar things elsewhere, like that social media-driven tourism surge in Hong Kong, lots of visitors, but lower average spend per person.
That's a really important distinction. It's not lack of interest, it's a different kind of interest that needs a different business response. And what about the property market? We touched on the slightly improved outlook in smaller cities, but is there anything else we need to keep in mind there? It's such a big factor in China's economy.
We absolutely have to remember that the property overhang hasn't just disappeared. Yes, home price declines might have slowed a bit in some areas, but land sales in lower-tier cities, a critical source of revenue for local governments, are still way down, like at decade lows.
Which impacts their ability to fund things, like tourism infrastructure.
Precisely. It's a huge headwind for local government finances, and that affects their ability to operate and maintain these destinations properly. So while that spending uptick from lower income groups is real and it's encouraging, it is definitely swimming against a very strong current from the property sector weakness. It's a complex balance.
Okay, so putting all this together, what does it mean for how we understand China's economy right now? And maybe more broadly, for businesses trying to figure out how to operate in this environment? How do we separate a passing trend from a more durable shift?
Yeah, that's key. We need to watch several specific indicators very closely, I think. Look at per trip versus per day spend, especially in those tier 3 and tier 4 scenic towns. Does a longer stay, even if thrifty day-to-day, actually end up offsetting the lower daily spend?
Right, cumulative spend versus daily spend.
Exactly. We also need to monitor occupancy and ADR, average daily rate, for the kinds of places these travelers use, like homestays and hostels in Dali-style markets. Compare them to 2019 levels, see if the overall revenue picture is actually improving despite lower rates.
Well,
Track event-led footfall conversion. Those cheap football tickets in Jiangsu, great, lots of people came. But did they actually spend money on food, drinks, souvenirs within, say, a kilometer of the stadium? Or did they just watch the match and go home?
okay, measure the spillover effect.
Right. And keep an eye on small city retail sales figures in provincial data, places like Henan. Are those growth gaps between rural, smaller cities and the big urban centers starting to close? And finally, track that property sentiment consumption link in lower-tier cities. Look at consumer confidence surveys alongside actual housing price data.
Okay, so lots to watch. What about practical takeaways? If you're running a destination or a business, how do you adapt to these value maximalists?
I think the strategy is becoming clearer. You really have to design for the value maximalist. That means leading with things that are free or very cheap as anchors. Think guided walks, local community sports leagues, vibrant night markets, things that draw people in without a high upfront cost.
So create the atmosphere first.
Exactly. Create the buzz, the reason to be there, and then monetize, but do it smartly through bundles, memberships for repeat visitors, things that offer perceived value rather than just trying to push single high-price items. Jiangsu's football ticket strategy shows the footfall part works. The monetization is the next challenge.
And what about timing?
Crucial point. Smooth out the shoulder seasons. Budget travelers are often much more flexible with their time. They're not just tied to weekends or peak holidays. So, price the weekdays attractively. Offer deals midweek. Don't just focus all your efforts and pricing power on those peak periods. Spread the demand.
So it really goes beyond just slashing prices across the board, doesn't it? It
Yeah.
sounds like a more strategic, targeted approach.
Absolutely. It's really about upgrading the basic services, not adding fancy gimmicks. Think clean, reliable public transport, secure lockers for backpackers, accessible public showers, maybe some decent co-working spaces, and really transparent, fair pricing. These are the things that convert a low-spend passerby into someone who stays longer, comes back, and actually does spend, just maybe more slowly and carefully integrating into the local scene.
Makes sense. Build the foundation for them to stay and spend comfortably over time.
And one last really important point for the destinations themselves. Mind the local fiscal math. With that weaker income from land sales in many smaller cities, they should probably favor amenities that have low upfront capital costs and are easy and cheap to maintain. Things that can be funded from operating budgets, rather than launching huge, expensive new projects that rely on debt or future land sales.
Be practical about what can be sustained.
Exactly. Build smart, maintain well.
So it really sounds like Californication isn't this simple paradox of packed streets and empty shops. It feels more like a powerful signal of a much larger recomposition of demand happening within China's economy, a fundamental shift in who is traveling and how they're doing it.
I think that's exactly right. We're seeing these lower income, oftentimes rich travelers exploring more but spending very carefully, responding very directly to clear value signals. And the places, the businesses that are going to thrive in this new cycle are the ones that figure out how to price for frequency and length of stay, rather than just chasing those single high-margin sales from a shrinking group of big spenders. It's a fundamental rethink, really, about what drives tourism and local economies and how we measure success beyond just top-line spending figures.
So as you reflect on all this, maybe consider how these shifts in consumer behavior in China, this focus on value, this change in who's participating might echo in other parts of the world. And what does it mean for how we measure economic health more broadly? What other hidden currents might be shaping demand in the markets that you follow? Thanks for listening. Follow us for daily insights into world affairs, and don't forget to like, comment, and share.